we also want to welcome those following us online. And as we start, we always start with the global economic landscape, which continues to face significant challenges. And one of the key concerns has been the growing uncertainty surrounding trade policies, which is weighing on economic performance worldwide. And as you can see, the projections of GDP growth globally has been revised down, with GDP growth projected to be at 2.8% in 2025, compared to the 3.3% we had in 2024. However, a slight rebound globally is expected in 2026, bringing growth back up to 3%. But if we break down this GDP growth by region, we see that advanced economies are expected to grow more modestly, with a growth projected to decline from 1.8% in 2024 to 1.4% in 2025. And if we look in our region, Sub-Saharan Africa is forecasted to maintain relatively strong growth, with the region expected to experience a slight decline for a GDP growth of 4.0% in 2024 to 3.8% in 2025, and then accelerate again to 4.2% in 2026. Now turning to global inflation trends. While inflation is projected to continue to decline, the pace of disinflation has slowed, and this is largely due to continued uncertainties in trade policies. And global inflation is projected to decline gradually from the 5.7% we had in 2024 to 4.3% in 2025, and further down to 3.6% in 2026, because of commodity prices that are projected to continue to fall. As you see, the global energy index is projected to decline by 17.4% in 2025, while non-energy index is projected to also decline by 3.3% in 2025. And I was talking about international commodity prices that will see a decline, and we observe these significant developments, and mainly due to persistent drops in crude oil prices, which are projected to fall by 20.7% in 2025, and natural gas is projected to rise by 5.8% before falling again by 8.6% in 2026. Now turning to Rwanda's external sector. The trade deficit has widened in the first 3 months of 2025, and we observe that merchandise export declined by 3%, mainly due to weaker regional demand for re-exports. However, traditional exports such as coffee, tea, minerals grew by 8.7%, and this performance was supported by stable domestic production and elevated international prices. Non-traditional exports, on the other hand, mainly manufactured and agricultural products, also saw a strong increase of 10.1%, reflecting solid performance from our domestic industries and steady foreign demand. On the import side, we see that imports rose by 5.8% in the first quarter of 2025, and this was driven by higher imports of raw materials to support our local industries, as well as capital goods, particularly machinery, electronics, and transport materials. Looking ahead, the trade deficit is expected to expand in 2025 and 2026, largely due to large-scale projects, including the Bugesera Airport. But this will be partially offset by a strong service exports like tourism and air transport, as well as steady remittances. And as a result, we are confident that international reserves will remain adequate, covering more than 4.5 months of prospective imports of goods and services. Now, turning to Rwanda's domestic economy. We all recall that we had a strong performance in 2024, with real GDP growth reaching 8.9%, up from 8.2% that we had in 2023. And we see that trend continuing when we look at our high-frequency indicators, with the composite index of economic activities growing by 9.3% in the first 3 months of 2025 compared to 8.5% that we had in the same period in 2024. And this reflects strong activity in trade, transport, hospitality, financial services, and telecommunication. Growth was also supported by ongoing construction, higher industrial production, and increased mineral exports, while agriculture has faced challenges due to adverse weather conditions and is expected to post moderate performance in the near term. But overall, we expect the economy to sustain its momentum in 2025 with projected growth of 7.1%. Turning to the monetary sector, we've observed significant easing. The interbank rate has declined by 151 basis points from 8.29% in the first 3 months of 2024 to currently 6.78%. And this follows the 2 central bank rates cuts that we had in 2024 of a total of 100 basis points, but also it's a result of ample liquidity that we have in the banking system. The deposit rate, it's also declining. It has declined by 84 basis points to 9.45%. And the most notable drops were in terms of deposits across various maturities. Lending rates on average also falling by 46% to 15.89%. And this was mainly driven by a significant decline in short-term lending rates, but also noting that short-term loans now account for 59% of all new authorized loans. We will now go to inflation developments. In the first quarter of 2025, headline inflation increased by 6.7% year on year. And the last quarter of 2024, we had an inflation at 5.2%. And this increase that we see was mainly due to higher core and fresh food inflation, while energy inflation eased. You can see that core inflation, there was an uptick in prices related to hotels and restaurants, which offset declines in housing and transport. Energy inflation eased thanks to lower solid fuel prices, and here solid fuel means firewood and charcoal, despite a slight increase in liquid fuels, petrol and diesel, following a revision in pump prices in February this year. And in April 2025, headline inflation stood at 6.3% due to lower core inflation, even as food and energy prices rose. And fresh food inflation particularly increased due to lower market supplies of beans and Irish potatoes, which are still in their growing season under Season B. But overall, we can see that the inflation in Q1 2025 still remains within our target band between 2% and 8%. Therefore, we go to the inflation outlook. In line with expectations, headline inflation has remained within the target range during the first quarter of 2025, and despite some upward pressure from food and core inflation. And looking forward, our inflation is projected to stay around 6.5% for the rest of the year and expected to decline to 3.9% in 2026. Nonetheless, risks to this outlook remain, and these include rising trade uncertainty and geopolitical tensions. And so, taking all that in consideration, the Monetary Policy Committee has decided to maintain the central bank rate at 6.5%. And this is a level that we consider adequate to keep inflation within the target while continuing to support economic activity. We are now moving to the financial sector performance for the first quarter of 2025. And as you can see, economic momentum supported the financial sector's growth. Total financial sector assets increased significantly by 23.2%, and reached 13.6 trillion at the end of March 2025. And that growth is across all subsectors. The banking sector's assets grew by 23.3% on the back of increase in deposits, largely coming from corporations and institutional investors. The microfinancial sector as well saw its assets growing by 20.6%, supported by a growth in both deposits and growth in equity. In the insurance sector, grew by 18.1%, driven by increase in investment income, but also in premiums and equity. And the pension sector as well recorded a 23% increase in total assets. We can see that the financial sector continues to play an increased role in the economy. And as it grows, its contribution to the broader economy is highlighted or emphasized by, one, the share of total financial sector assets to GDP that has now reached 70.3% compared to 64% that we had in the same period last year, while the credit to GDP has now reached 27% compared to 26% in March 2024, and this reflects the sector's growing role in financing the economy. We see it in the next slide, where lending institutions have continued to lend. In the first quarter of 2025, new authorized loans in banks reached 643 billion Rwandan franc, an increase of 29% year on year, while outstanding loans stand at 5.2 trillion Rwandan franc, which is an increase of 13%, and these are outstanding loans from both banks and the microfinance sector. And in line with the new authorized loans, we've seen that the total loans grew by 13%. And here I wanted to also break down that the largest shares of new loans went to the trade sector, 27.9%, then households, real estate, construction, and manufacturing. Now looking at the banking sector specifically and its stability indicators, the banking sector remains well capitalized and stable. The capital adequacy ratio for the first 3 months of 2025 stood at 22%, and this is well above the 15% minimum regulatory requirement. And on the liquidity side, the liquidity is also robust, with a liquidity coverage ratio at 337%, and this strong position reflects increased deposits in the banking sector. On asset quality, banks continue to mitigate risk linked to their loans, with a non-performing loan ratio that has continued to improve, reaching 2.7%, which is well below the 5% threshold. The banking sector continues to also be profitable. The return on equity continued to be high, standing at 19% by end March 2025, while return on assets rose to 4.8%, supported by a rise in income-generating assets, as well as improved operational efficiency. Going to the microfinance sector, it also continues to hold enough capital and liquidity, with capital adequacy ratio for the microfinance institutions at 35.5%, above the minimum required. And liquidity also has improved, with a liquidity ratio of 68% compared to the 30% minimum requirement. On the non-performing loans, NPL in the microfinance sector is also at 4.3%, which is below the maximum threshold of 5%. Private insurers have also maintained their ability to manage risk and also meet clients' demands. Their solvency stood at 199%, well above the 100% regulatory requirement, indicating strong financial health. The liquidity is also above the required minimum of 100%, with a quick liquidity ratio of 109%, while the claims ratio moderated to 58%, which is below the 60% best practice threshold. And we also see that the insurance sector continues to be profitable, with a return on equity in the first 3 months of 2025 at 18%. Now we can go to the public pension fund performance. The public pension fund continued to perform well, with strong growth in both contributions and investment income. Contributions grew by 98% on the back of the recent revision of pension contribution rates. But we can also see that the benefits to pensioners increased by 60%, reaching 21.9 billion Rwandan francs, in line with the revised benefit policy aimed at improving pensioners' welfare. For the long-term savings scheme, Ejo Heza, contributions continue to rise, largely due to mobilization efforts. And we can also observe that the majority of contributors are from the informal sector, which is the scheme's intended primary target. So contributions reached 9.1 billion in the first 3 months of 2025, and we can see that contributions to Ejo Heza from the informal sector is now at 82%, while the formal sector contributes 18% on the long-term savings scheme. Now coming to the payment system performance, retail transactions continue to grow in line with the government's cashless agenda. The total value of retail electronic payments reached 17.2 trillion Rwandan franc, and this demonstrates how digital financial services are continued to be adopted and reaching more people, as well as facilitating easier business transactions. And collectively, mobile payments, internet banking, and mobile banking accounted for 334% of GDP, highlighting the transformative impact that digital financial services on Rwanda's economy. If we look at eCash, which is the interoperable instant payment system, it continues to grow with 1.9 million active users as at end of March 2025 and 17 participating institutions. And the platform has now expanded to support wallet-to-account transactions, and the value of transactions has grown significantly in a year from 7.9 billion at end March 2024 to 30 billion in the first 3 months of 2025. And here we can also note that district SACCOs, Umurenge SACCOs that were consolidated now in 5 districts, Gicumbi, Musanze, Nyarugenge, Kicukiro, and Gasabo, are now fully enrolled on push and pull services, which also has an impact on the volume of transactions that we see digitally, and that makes it easier for members of the former Umurenge SACCOs, which are now consolidated in the district SACCOs, to transfer funds across digital platforms. Now we look ahead on what the financial sector is expected to remain healthy and stable, backed by adequate capital buffers and ample liquidity to continue supporting the economy. But that said, we are monitoring several risks to this outlook. The first one being a potential rise in borrowing costs due to tight global financial conditions. The second being asset price corrections, as risk aversion continue to grow amid global policy uncertainty, which could affect also our local institutions. And finally, high liquidity in the market could change investment patterns from banks and non-bank institutions. However, the National Bank of Rwanda, as the supervisor of the financial sector in collaboration with key stakeholders, we will continue to monitor these risks and take timely policy actions to preserve Rwanda's financial sector stability. I thank you, and we are ready to take your questions.
Thank you. Thank you, Governor. I will open up for the Q&A, and we'll ask each media house to take up 2 questions first, and then if time allows, we can take up other questions. Thank you. We can have we can have RBA, and then which media house? And please tell us your name and from which media house. Thank you.
Murakoze nyakubahwa guverineri w'abanki nkuru y'igihugu, nitwa Placide Nyinshuti nkorera RBA. Nk'uko mubigaragaje tubonye ko ubukungu bw'igihugu buzakomeza kuzamuka nibura ku kigero cya 7.1%, ariko twabonye ko mu gihembwe giheruka ibyo Rwanda rwohereza mu mahanga byagabanutse 3%, ndetse ibyo Rwanda rutumizayo bikiyongera kuri 5%. Twagira mu dusobanure niba icyabiteye, ariko munatubwire niba nta ngaruka bishobora kuzagira ku ifaranga cyangwa se ku isoko ry'ivunjisha, ku ifaranga ry'u Rwanda ku isoko ry'ivunjisha, ndetse n'ingamba mufite kugira ngo ifaranga ry'u Rwanda rikomeze ryihagarare ku isoko ry'ivunjisha. Ndumva ari ibyo ngibyo, wenda ibindi bagenzi banjye baragenda bigaruka. Murakoze.
Thank you very much. My name is Sobotera, managing editor of the Kigali Financial Journal. Given the global monetary policy tightening and the volatile commodity prices continue impacting the emerging markets, how is the bank addressing risks to Rwanda exchange rate stability and foreign reserves, and particularly with regard to spillovers of the global geopolitical tensions and shifts in major central bank policies like the Fed and the European Central Bank? Also, beyond the interest rates, what unconventional measures is the bank considering to addressing the structural challenges like climate-related shocks that could affect long-term price stability and sustainable growth in the economy of the country? Thank you.
And then we continue. So, mpereye ku kibazo cya mbere cya Placide, nibyo turabona ko ubukungu bw'u Rwanda nkuko bwari bwiyongereyeho ku kigero gishimishije umwaka ushize, niyo tureba mu mibare dukurikirana mu mezi 3 ya mbere y'umwaka, nubwo imibare itaratangwa n'ikigo cy'ibarushamibare, turabona yuko ubukungu buzakomeza kuzamuka. Mwabonye ko ibipimo dukurikira by'uko ubukungu bwiyongera mu gihugu, icyo twita composite index of economic activities, bigenda ireba sector zose z'igihugu, turabona ko tuzakomeza kuzamuka ku kigero mu mezi 3 ya mbere ku kigezo gishobora kugera ku 9%, kandi n'imibare igaragaza ko uyu mwaka w'ibihumbi 2025 ubukungu nabwo buziyongera ku kigero cya 7.1%. Ku byerekeranye n'ibyo twohereza mu mahanga byagabanutse, twagaragaje ko hari igabanuka ku byoherezwa mu mahanga, ibyo twita re-exports, nabyo tuba twavanye mu mahanga tukabyohereza mu bihugu by'abaturanyi. Ariko urebye ibyo dusanzwe twohereza mu mahanga, byaba ikawa, icyayi cyangwa se na minerals, byo byongereyeho ku 8.9%. Ikindi kigaragara nuko n'ibyo dutumiza mu mahanga nabyo byongereyeho, ariko byongeraho 5.8%. Aho niho twerekanye ko cyacyo kiri hagati y'ibyo twohereza mu mahanga ndetse n'ibyo tuvanayo kiyongereyeho. Aho wibajije uti ese ibyo ntibizagira ingaruka ku gaciro k'ifaranga ry'u Rwanda? Ubu aho ifaranga ry'u Rwanda rihagaze tubona yuko ugereranyije n'idolari ry'Amerika ryari ryatayeho 2.6%, bikaba ari ikigero kijya kungana n'amezi 3 ya mbere y'umwaka ushize. Ntabwo turimo kubona ko ifaranga ryacu rita agaciro ku buryo burengeje ibyo twari twateganyije. Ariko nanone ibi ntibitubuza kureba niba hari ingaruka zidasanzwe dushobora kugira ku ifaranga ryacu. Ikiza nuko twagaragaje ko ibyo twita foreign exchange reserves cyangwa amafaranga yo hanze tuba dufite ifite igipimo gishimishije kiri hejuru y'amafaranga tuba dufite yashobora guhangana cyangwa se guhangana n'amezi ane cyangwa kugura ibyo dutumiza mu mahanga ku mezi ane, ubundi nicyo kigero tureberaho. Ubu turi ku mezi ane n'ibice 7. Aho rero nibyo biduha icyizere ko habaye impinduka zidasanzwe na banki nkuru y'u Rwanda yafata ingamba zikomeye ku ifaranga ritata agaciro. Ariko nanone ntago ari banki nkuru y'u Rwanda gusa ituma ifaranga ryacu ridata agaciro, ahubwo ni no gukomeza ingamba leta yashyizeho zo kongera ibikorerwa mu nganda. Mwabibonye ko nko mu nama ya guverinoma yo mu kwezi kwa gatatu byaganiriweho uko twakomeza gushyira imbaraga mu rwego rw'inganda kugira ngo rukore byinshi dushobora kohereza mu mahanga, ari nako tugabanya ibyo tuvana mu mahanga. Kuri ubu rero turumva nta kibazo gihari kandi dufite foreign exchange reserves zihagije kuba twashobora guhangana n'ibidasanzwe byatera ikibazo ku isoko ry'ivunjisha. Then second question on probably the one related to climate-related challenges and how it might impact price stability, that I will leave it to our chief economist to explain. On the monetary policy tightening, I think it's still too soon to confirm that there's a global monetary policy tightening. Actually, if you look at the latest European Central Bank action, they have reduced their rates. So each country, each jurisdiction continues to look at inflation outlook in their own country and whether there are inflationary pressures compared to the targets they have. And that's what we do as well as Central Bank of Rwanda, our Monetary Policy Committee. We look at the data we have for now. And true, there's a lot of uncertainties now on what these US tariffs would have as impact on global trade, whether that would translate in increased imported inflation. But we don't have the data yet, and as you know, those tariffs have been paused or being negotiated. And so for us, it's the same. We rely on data and inflation outlook to really decide on monetary policy action. And the fact that we have maintained the central bank rate is that we consider that our monetary policy, which had been tightened from 2022 up to last year, is still at tight conditions. And you've seen that our inflation, even the projections show us that we won't go above the 8%, which is the upper bound. And so based on that, the data we have currently, but also taking into account uncertainties on price volatility that will certainly come if the tariffs are imposed. And also, I think, the risk to supply chains with the trade policies changing and trade wars between the two biggest world powers. It's really important for monetary policy committees and central banks to really rely on the data and take necessary actions and remain within the boundaries of their mandate, price stability. So we certainly will not take unconventional measures. We continue to rely on the data, on the projections, and take action to make sure that we remain, in terms of inflation, in our band between 2% and 8%. But I do agree with you. There are so many things happening in the world that could impact our projections. And that's why you saw that in our risks, we look at geopolitical tensions, what the impact on inflation is. And as Monetary Policy Committee, if necessary, we may convene and take monetary policy action if any external shocks were being assessed and those risks materializing. That's what I can say on that. And Thierry, over to you.
Thank you, Governor. On the question related to climate change, you're right, that's not only affecting Rwanda, it's affecting everyone. And in every country, central banks are facing this challenge of maintaining price stability when climate change is impacting, for example, agricultural production and therefore food prices, as it was the case in 2023. I think for us to complement what the Governor just explained, looking at price stability means looking at actually if there is a change in food prices, this price is going to affect other prices that we call core inflation. Is it going to affect housing prices, the rents, the utilities, every other thing that actually people consume? And we forecast that, we project that. So what we are trying to do, not only in Rwanda but also in the region, we are discussing with colleagues in central banks and worldwide, is to incorporate climate change effects in our economic models to try to understand better what will be the impact of climate change from food prices, core inflation, to actually overall inflation. If we have a better idea of projections of inflation, then central banks can take measures before, like it was the case in 2023 when NBR decided to increase the central bank rate. So the reaction of the central bank with regard to climate change depends on how climate change is affecting overall inflation in the medium term. And we are getting better at that. We are improving our models. We are working with international partners and with regional partners to try to do that. Beyond that, actually, to address the real issue of climate change in terms of how do we adapt to this situation, the government is aware, and through the Ministry of Agriculture, there are measures in place regarding investing in irrigation, for example, all to be in a position where our agriculture becomes less dependent to events related to climate. The last point is on meteo, because now we are actually using a lot of data from meteo, whether actual data or forecast. And here again, meteo data is very important to inform both the models that we use, but also the farmers to be able to adjust on time. Thank you.
Thank you, Governor. We have a question from our YouTube follower. He's asking, his name is Kamukama Moses, and he's saying, I would like to know the measures being taken by NBR on the issue of high liquidity being seen in the financial sector and the observed significant decrease in amounts of government bond issuances. Thank you. And maybe we can take from, this is RBA, the English section.
Thank you very much. My name is William Evans. I work with RBA. I also reflect on the widening trade deficit that is beyond 10%. I want to pick your thoughts as the central bank, if you're concerned about the rise, but also what you are doing. Of course, you talked about the reserve that is, but just beyond the reserve, what else is being done or what else can be done? But also on the issue of the increased imports and then a reduction in exports, one would wonder, as the central bank, what do you identify as the main cause, or what is influencing this sort of decrease, but also what can be done to sort of boost Rwanda's exports? Yes, thank you.
On the question on liquidity in the banking system and how we're monitoring that, as financial or banking supervisor, we always are satisfied when there's ample liquidity in the banking sector. Of course, we wouldn't want to have liquidity that's idle and not financing the economy. So the trend that we've seen in the first 3 months of 2025, with a liquidity coverage ratio now at 334%, is, as we mentioned, due to, one, increased deposits from institutional investors, but it's true as well that as government embarked on this fiscal consolidation, it's borrowing less on the domestic market, and banks were one of the major investors in treasury bonds. And hence, investment patterns are likely to change for banks, looking for other opportunities, but of course not taking excessive risks. And it's, I think, a change in the pattern because, as government announced, this fiscal consolidation is across several financial years. But for us as central bank, what would be concerning is actually the opposite, if we had less liquidity, because from a stability point of view, that would mean that banks are not able to meet their short-term obligations. But it's up to the banks to now relook at their strategies as there's less domestic borrowing from government. What other avenues do they have from investments? So that's what I can say on that question. The second question's on trade deficits and whether we are concerned. I think as a developing nation, trade deficits cannot be totally overruled. But here we only show probably part of the story, because if you look at the whole current account, this trade deficit is actually offset by increasing foreign direct investments, increasing remittances that actually offset the impact on trade deficit. And that's why our foreign exchange reserves are actually high. Secondly, as central bank, we cannot only be the ones working on these structural issues. For exports to increase, there are prerequisites. One is on the traditional exports to continue increasing volume. But the good thing is that international prices on our main export commodities have also risen. But on exports of, let's say, manufactured goods, the increase will take time. We've seen that we continue to import machinery that goes to our manufacturing. This is sort of long-term investment that will address that trade deficit issues that we've seen. But as central bank, of course, we continue to monitor the trend and work with different government stakeholders, including the Ministry of Trade and Industry and RDB, to sort of show them where we see risk. And although we know exports will not increase overnight, what are we doing on the other parts of the current account, such as mobilizing more foreign investments, mobilizing the diaspora that wants to invest, but are also increasing remittances. And I think when we look also at the services sector, actually we have now a trade surplus. So services such as tourism, air transport are bringing in more FX. So it's a balance of those two that we monitor. But most importantly for a central bank that's in charge of foreign exchange reserves is making sure that we're always above the 4 months of import coverage, which is the target that we have to make sure that we are adequately have adequate buffers in case of external shocks. Thank you.
Bloomberg and then CNBC.
Hello, Governor. My name is Indira Ganga. I'm with Bloomberg. I have a couple of questions. The first one would be, how would you describe the availability of dollars in the market? Just a week back, when you went to certain banks, there's a certain threshold of dollars you could not withdraw, and also businesses are having trouble getting a hold of dollars. And the second part of that would be, we're seeing the Central Bank of Kenya and also the Bank of Uganda buying dollars to just buffer their reserves. Is that something that you're considering? And also finally, I just want to know, how far is the National Bank of Rwanda in terms of buying gold for reserves?
Question on availability of dollars and also comparison with other central banks in the region that are buying FX to beef up their reserves, that I'll probably leave it to the chief economist. And then on your last question on gold, it's interesting that you bring it up after our Eastern Africa Community Central Banks Monetary Affairs Committee, which observe a trend for all central banks in the region to consider gold as a reserve asset. Similar to our peers in the region, the Central Bank of Rwanda as well, we've conducted a study to see whether gold can be also embraced as an additional asset that we invest in. One, given its ability to sort of counter shocks that we see on the financial markets, and as a hedging option in case of external shocks. And as a National Bank of Rwanda, we have decided to start exploring gold as well. But this is a new asset class, and as we continue to learn from our peers, we will probably communicate by the end of the next financial year how much gold we've been able to acquire, whether it's the potential for high returns is still is what we have expected. But we keep in mind that as a central bank, the objective of our foreign exchange reserves and the investment that we do is first of all capital preservation, and second, having liquid assets, and third, making sure that we have return. And when you look at gold, it actually, for now, meets all those criteria, so our consideration for now is positive.
Yes, thank you. Let me start with the region. I think what you're asking about some central banks buying FX on the market is true. But if you look at the structure of their economies, there's a lot of movement of capital flows in and out of the country, which at some point in time they can have large inflows. And in that case, central bank also can benefit from this situation to buy foreign exchange, so to buy dollars and beef up their reserves. And that's the case that you are referring to. In our case, we are in a different situation, whereby you can see, as we're discussing about increasing the trade deficit, we have at the same time not very large sudden inflows in the country, but not at the same time also outflows. So we have quite steady investment coming in, but we're not in a position where actually buying from the local market would be a strategy for the moment, unlike some other countries in the region. So the second point is also regarding the level of reserves that we have. As the governor explained, the reserves are sufficient and above the benchmark, so we are not actually in the need of buying Forex at the moment.
How about availability in the market?
Okay, now the other question you raised on availability, I'm not sure what practical example you have, because the information we have is that actually compared to last year and the year before, the situation in terms of pressure on the market is much less. So I'm not sure about, I don't think that the fact that you say that dollars are not available, I don't think this is the case as we speak, unless it is an isolated case that we can maybe look at in detail.
Thank you, Governor. Abi Agina from CNBC Africa. Just a couple of questions as well. My first question is actually a follow-up on the gold conversation. I just wanted to know, do you have a timeline you're working with? How soon might this come to fruition? Then my other question is in regards to the trade deficit and the impact it's having on the Rwandan franc. How does the Governor, how are you assessing the situation, and perhaps any interventions likely to come forth? And lastly, my final question is in regards to the financial stability in regards to digital services. I do know that, Governor, you held discussions with Cambodia, your counterpart from there. Perhaps what should we expect in your MOU? How soon is this likely to also see the two countries bolstering their ties together? Thank you.
Thank you. Probably I'll take one by one and we continue that way. I'll respond to the question on gold and probably digital financial services and partnerships with Cambodia and other countries, and probably I'll ask the Deputy Governor to comment on the trade deficit part. So your follow-up question on gold timeline. One, we've had now approval from our board as central bank to consider gold as an investment asset. But as for any investment, we always sort of take the decision based on those three criteria I mentioned. And for our timeline is that for the next financial year, starting in July, that's when we would start adding gold to our portfolio. And then on digital financial services, and in terms of probably partnerships with other central banks, it is true that we've had an MOU between the National Bank of Rwanda and National Bank of Cambodia since 2023, and mainly looking at exchange of best practices in development of instant payment systems, but also supervision of payment systems. And one would wonder why Cambodia. So Cambodia is one of the first countries that launched an instant payment system called Bakong, which is based on blockchain. So almost, being a pioneer in CBDC. And as you know, as Central Bank of Rwanda, we also are, on that journey. And it's important that we really keep learning from central banks that have started. The second reason is also their fintech sector. They had expressed interest in really expanding fintech into Africa because we have similar economies, and hence, that sort of MOU that will facilitate also exchanges on development also, but also supervision of fintechs, looking at Southeast Asia, but also Rwanda. But Cambodia is not the only country, as you know. On the fintech development, we also work closely with the Monetary Authority of Singapore. And as we've seen recently, we also concluded an MOU with the Central Bank of Brazil. And why Brazil? One, it's one of the biggest emerging economies. Second, they have one of the most performing instant payment system called PIX. And as we develop eCash, we want to really learn from the best and see how we can also have a similar performing system. So that's a path that we've taken to make sure that we are at the helm of developing digital financial services for Rwanda. So I think trade deficit, Deputy Governor.
Thanks, Governor. Anyway, that's a good question that you have asked. And I want to refer to what the Governor has mentioned in her presentation. Really, as a developing country, we cannot target to have zero or just zero deficit in our trade. When you look at the world, even in big countries, if you look at the US, if you look at the UK, trade deficit is not a problem in itself. What will be the problem with trade deficit is if, for instance, when you look at the things that you are buying that are bringing about that trade deficit, if there are things that are not helping the economy to grow. When you look at what you are buying, which is kind of leading to this trade deficit, then investment, machinery, capital, equipment, which really are meant to make our economy better, which are meant to make our economy more productive. There will be a problem if we were buying things that are making our industry disappear. What we are doing is actually strengthening our economy, which is fine. So this could be a short-term thing, but as we increase our productivity, as we increase our output, then that trade deficit is supposed to be reducing. That leads also to what you have said about how does it affect our currency. Yeah, of course, as the governor has explained, that differential between the amount of dollars, for instance, we need for our import and what we can raise through our export is a problem. But you also have to look at the current account. How much are we getting from outside in terms of remittances, in terms of foreign direct investment? So really, when you look at both, we are not really worried. And that's why we have that buffer, that reserve of 4 months of imports. So it tells you that we are not really worried about that. So to cut the story short is the trade deficit itself is not a problem. As a developing country, we are supposed to have it because we want to have our economy grow. But that's something that is going to be reducing over time as productivity and output in our economy grows. Yeah, that's what I can say.
Yes.
What it means for the country's external balance. And also if you speak to the cost of opportunity, really, in, let's say, an ordinary person to understand. Thank you.
Okay, thanks. In simple terms, this trade deficit means that our bill for import is bigger than our revenues from export. So we pay more to import foreign goods and services than they pay us when they buy our products. So what does it mean for the economy? As I said, as a developing country, there are things that we have to buy from outside. It will be a problem if, for instance, we're buying things that come to destroy our industry. Of course, there is an opportunity cost of what we do. If we buy from outside, probably, and we cannot support our domestic industry, that's a problem. But as I said, what we are doing is to buy things, to buy capital goods. For instance, one of the things that is making it widening is like Simerwa buying machinery to come to bring it here to increase their production of cement. So when you look at it now, the trade balance is going to be high because we are spending more to buy those equipment. But when Simerwa starts producing and exporting, our trade deficit is going to reduce. When the governor said next year we could have a bigger trade deficit, she mentioned projects like the Bugesera Airport, which we are going to have to fund. In the short term, it's going to, because we're buying things from outside, in the short term, it is going to be, our trade balance is going to be high. But when we start getting revenues from that investment, when we start getting jobs from that investment, that is going to be a good thing for the economy. So it's really a short-term kind of pain that we are going to have to sustain, but in the short run, it's a good thing to have for the time being.
Yes, Vicent.
Mrakoza Governor, Vincent Gasano, KT Press. Mine is a bit of a theoretical one, if I may. We have the real economy, and then we have these external events like the unpredictable tariffs that are going to come. I just really want to understand the degree to which the real economy remains stable in spite of these external fluctuations, and it's bound to affect monetary policy. But can we be confident and say that irrespective of these external tariffs, especially if we don't export that much anyway to these countries, it won't necessarily affect us that much? The other thing, if I may, the idea of gold reserves, I mean, it's not a new one. It's been around for a long time. Given the fact that the region produces gold, why is it's only just being considered now? Why hadn't we considered it before? Is there a specific reason why our kind of economies and our countries haven't considered that? That's it. Thank you very much indeed.
Thanks, Vincent, for the questions. Probably starting with the first one. Our economy, when we look at the diversity of our trade partners, it is good that we are not over-relying to one, I would say one country or one region. Actually, when you look at the share of our imports and exports, most of it is from the African continent at 41%. And if we're speaking specifically to the US, which announced tariffs for Rwanda, it's going to be 10%. But really our share of export to the US is very marginal, less than 2%. Not to say that we don't want to increase it, but to show you that the impact is limited on our economy. However, there are indirect impacts to that. One would be that if those tariffs after the 90-day pause are actually reinstated, what would happen is that countries that are impacted the most might have to tighten their monetary policy, including the US if there are retaliatory measures. And hence, on our economy, one, if the Fed decided to hike their rates as a result of increased imported inflation in the US, that would have an effect, one, on the cost of funds globally, because the US Treasury yields are sort of the benchmark. Second, there would also be a strengthening of the dollar, and that would have an impact also on exchange rate and currency exchange rates, especially in developing economies. So that is what we need to monitor, because it would have an impact, an indirect impact on our economy. So for now, we don't see any major issue. However, as we have highlighted, we live in a very volatile world. So by each announcement and how the markets react, that could have actually an impact. And that's why, as Monetary Policy Committee, we need to be on top of those changes, factor them into our economist models, as the chief economist was explaining, to see what that means for our projection for inflation. And when our inflation is actually going, if our projection were to show that inflation is going above the upper bound of 8%, then we would need to take action. But we are not there yet. And we've seen that globally, actually, there are negotiations to make sure that those trade tensions reduce. It's good news, and let's hope that that continues in the right direction, so that not only the global economy is not destabilized, which would have an indirect impact, obviously, on Rwanda's economy. Second, on investments in gold. True, I think the crisis that we've seen for the last 5 years have pushed all economies, all economic policymakers, but including central banks, to relook at their exposure and probably to challenge, I would say, the status quo. For all countries in the world, I think the reserve currency and reserve asset has always been US dollar and US Treasury bonds. But the volatility on the market, but also probably the risk of not being, diversified in your portfolio, has heightened with this crisis. So I think that's the main reason you see that in our region, but not only our region, even when you look at advanced economies' purchase of gold to beef up their reserve, they are a reflection of those risks that have heightened, and the heightened volatility that makes every central bank look at how do I diversify my portfolio to make sure that in case of any external shock, I can still have, preserve my capital. So I think it's that situation that makes even central banks in the region look at gold. But one was to also be realistic. You can't just buy any asset because you think it's safe if you don't have enough reserves yourself. So that's also one of the reasons. Limited reserves also limit you on the capacity of assets that you can invest in. But now I think the analysis and that we've done and the readiness to be able also to manage that gold as an asset, because you need investment officers and traders that understand the risk and be able to actually recalibrate that portfolio. Those are prerequisites to start investing in gold, and it's the journey that we've taken so far. Thank you.
Governor, we have a few minutes to the end of the press conference. With your permission, we can take 2 more questions.
Can go ahead, and probably one online as well if they are still coming.
Thank you.
Murakoze. Mwagize muti ugereranyije n'idolari rya Amerika kuri ubu ifaranga ry'u Rwanda ryagabanutseho 2%. Ese byaba byaratewe n'iki? Ku rundi ruhande ni izihe ngamba zaba zihari cyangwa se zarafashwe kugira ngo ifaranga ry'u Rwanda ridakomeza guta agaciro? Murakoze.
Murakoze. Nitwa Thierry Ndayishimiye, nkorera radiyo Agasaro Kaburaga. Ikibazo cyanjye kirajya gusa n'icya mugenzi wanjye ariko nyakubahwa gavana yifuza ko mugisubiza mu Kinyarwanda. Ibiciro ku isoko bikomeje kuzamuka, abaturage baribaza ese nkamwe mufite mu nshingano politiki y'ifaranga n'iryari ibiciro bizongera kugabanuka? Kuva covid yatangira hari ibicuruzwa bimwe na bimwe byakomeje kuzamuka. Ni ikihe cyizere muha abaturage? Murakoze.
Governor, can I read the two online? Thank you. Brice is asking, why does the central bank rate take long to impact actual lending rates in commercial banks? Then we have another one who is asking, what is the impact of monetary policy on Rwandan economic growth in the last 5 years compared to other years? Thank you.
So on the last two questions, probably on the central bank rate and transmission mechanism to lending rates, that probably I will ask our Executive Director for Financial Stability to talk about it on the lending rates. And then the second one, the Chief Economist can take it. Nahera ku bibazo byabajijwe hano, icyambere ku gaciro k'ifaranga, wenda umuntu yabanza gusobanura impamvu tubona agaciro k'ifaranga ryacu urebye ugereranyije n'idolari ry'Amerika, nuko agaciro k'ifaranga ryacu ni byemejwe yuko kagomba kugendana nuko abashaka amafaranga yo hanze bangana n'abayazana mu gihugu. Nibyo twita floating exchange regime. So kuba ifaranga ry'u Rwanda ryarigenda rihindura agaciro byo ni ibintu byitezwe. Ariko hari icyo tugomba kureba ubu urebye mu mezi 3 ya mbere ifaranga ry'u Rwanda ryari ryataye 2.6% ugereranyije n'idolari ry'Amerika. Ukavuga uti nka banki nkuru y'u Rwanda turakora iki? Icyambere tugomba kureba ni ukureba niba ako gaciro k'ifaranga ry'u Rwanda kadaterwa n'ababa bavunja amafaranga ku buryo butemewe cyangwa se abatuma iryo faranga ry'imanuka, ibyo twita malpractices. Ibyo ni byagiye biganirwaho nko kuba abantu baka yuko ubishyura ubukode abwishyura mu madolari kandi turi mu Rwanda. Ibyo bituma abantu bashakisha amadolari kandi bitari ngombwa, kuko turi mu gihugu cy'u Rwanda gikoresha ifaranga ry'u Rwanda, umuntu yagombye kwishyura mu mafaranga y'amanyarwanda. Mwagiye mubona ko dukangurira abantu bagikoresha bagisabwa kwishyura nk'ubukode mu madolari kutugana, kuko hari ibihano biteganyijwe by'abantu baca baka abandi kwishyura mu madolari mu buryo butemewe, ndetse ubu hari n'amategeko arimo kuvugururwa kugira ngo ibyo ibihano bikazwe kugira ngo duce burundu iyo tendency. Icya kabiri tureba ni ukureba ese amafaranga amadolari nkuko mwavuze ati ifaranga ry'u Rwanda ugereranyije n'amadolari, idolari naryo ku isoko mpuzamahanga hari igihe rizamuka. Ibyo banki nkuru y'u Rwanda ntacyo yabikoraho, ariko twebwe icyo dufite mu bushobozi ni ukuvuga ngo ese iyo tubonye nk'iki cyuho kiri hagati y'ibyoherezwa mu mahanga n'ibyo tuvanayo gikomeza kwiyongera, aho nk'abagira inama guverinoma ku byerekeranye n'ubukungu dukomeza kubereka aho tubona icyuho, ariko ikigaragara ni uko ibyo twohereza mu mahanga byo byakomeje kwiyongera cyane cyane iyo urebye ikawa, icyayi ndetse na minerals, ariko ibiva mu nganda byo ni ibintu bitwara igihe. Ari nayo mpamvu ubona ko ibyo tuvana mu mahanga bikomeza kwiyongera cyane cyane nk'amamashini, kuko ntituyakorera mu Rwanda, ariko ni ibintu biduha icyizere ko mu myaka iri imbere mu gihe izo nganda zatangiye gukora zikagabanura ibyo twajyaga tuvana mu mahanga. Mwumvise ko twabahaye ingero kuri sima, niba inganda za sima zirimo kongera ubushobozi, bwo no kuvuga ko sima ikorerwa mu Rwanda iziyongera ikaba yashobora no koherezwa mu mahanga. Ibyo nibyo tubona bigabanya icyuho icyuho kiri hagati y'ibyo dukura mu mahanga n'ibyo twoherezayo, bikaba byanafasha ifaranga ryacu kudakomeza guta agaciro, kuko icyo gihe amafaranga tugomba kohereza mu mahanga abagabanuka, ndetse twakohereza n'ibintu byinshi mu mahanga, ayo madolari akaba aboneka. Aho niho navuga ko banki nkuru y'u Rwanda ikomeza kureba. Icya nyuma ni uko guta ifaranga kw'agaciro ntabwo tugomba kubireba gusa nk'ikintu kibi umuntu ahita avuga ati ifaranga ryataye agaciro wenda nuko ubukungu butagenda neza, ahubwo hari naho ku byo wohereza mu mahanga, iyo ifaranga ryawe rifite agaciro gatuma bishobora gucuruzwa ku giciro kiri hasi, ubwo bizagurwa ku bwinshi. Nibigurwa ku bwinshi, ubwo ingano y'amafaranga tuvana hanze iziyongera, nabyo bifashe agaciro k'ifaranga ryacu. Hari byinshi bigomba gukorwa, ariko ntabwo ari ikintu giteye ubwoba kuvuga ngo ifaranga ry'u Rwanda ryataye agaciro ku idolari ry'Amerika. Hari iminsi mike wenda nuko tutajya tuyerekana, risa n'irizamutse gato ubundi rikamanuka. Ibyo niko byagombye kugenda muri iyo floating exchange regime dufite, kandi mu gihugu gikomeza kwiyubaka, kuba dukura ibintu mu mahanga bifasha inganda, bigomba gukoreshwa mu nganda, byo biri mu rugendo rwacu rwo guteza imbere igihugu cyacu no mu iterambere. Ntabwo tubibona rero nk'ikibazo cyane. Murakoze. Hari ikibazo mwari mwabajije cyerekanye ibiciro bikomeje kuzamuka. Ibiciro byose ntabwo bikomeje kuzamuka. Twerekanye ko nk'ibiciro bijyanye n'ibikomoka kuri peteroli byo ku masoko mpuzamahanga biragenda bigabanuka. Uko bigabanuka ni nako natwe tubona bigenda bigabanuka. Ibiciro by'ibiribwa byo nibyo, kubera ko iyo urebye nk'ibiciro icyo twabonye mu kwezi kwa kane, byaba ibiciro by'ibishyimbo, byaba ibiciro by'ibirayi byari byazamutseho gato. Kubera iki? Kuko ubu season B nibwo yari gitangira, ubwo tukaba twizera ko byagabanuka mu gihe cy'umusaruro uhereye mu mpera z'ukwezi kwa gatandatu. Ikibazo wabajije tese tuzabona ibiciro bisubira aho byari biri wenda mbere ya Covid. Hari bimwe kuba ibiciro, umuvuduko wo kuzamuka kw'ibiciro nicyo tubona nk'ikibazo. Niyo mpamvu tuba dukomeza gucungana n'iyi mibare y'uko umuvuduko w'ibiciro utarenza 8%. Aha rero murabona yuko kuri ubu ngubu icyo duteganya ni uko uwo muvuduko utazarenza 6.5% muri uyu mwaka wa 2025. Aho biracyari muri wa murongo tugenderamo, ariko unagereranyije n'imyaka ishize, muribuka ko nko mu 2022, 2023 umuvuduko w'ibiciro ku masoko wo wari urenze 10%. Tugenda tugabanyura uwo muvuduko mu mwaka ushize, ku mwaka wose impuzandego yari 4.2%. Aho rero biragaragara ko wa muvuduko utakomeje nk'uko wari usanzwe, kandi icyari cyabiteye hari ubuhinzi butari bwagenze nk'uko tubyiteze muri iyo myaka, ariko n'ibiciro by'ibikomoka kuri peteroli, intambara ya Ukraine itangiye, byahise bizamuka cyane. Aho twe nta peteroli tugira, tuyivana hanze, ubwo ibyo biciro bizamutse natwe birazamuka ku isoko, bikatugiraho ingaruka. Ariko ikigaragara ni uko yaba uyu mwaka yaba n'umwaka utaha 2026, uwo muvuduko w'izamuka ry'ibiciro nawe uzaba wagabanutse, ugeze kuri 3.9% mu 2026. Icyo nicyo cyizere twabaha yuko uwo muvuduko utazarenga zambaguza hagati ya 2 n'8%. Yes, go. Ishila.
Thank you, Governor. So true, there's a slow transmission of the monetary policy, and part of it can be explained by the liquidity levels in the market. So when the deposits are high, banks will not have a need to go to the central bank to borrow or to other banks. So depending on the level of liquidity that is existing, and as we saw, the liquidity levels are high, so banks don't find it necessary to go to the central bank to borrow, and as a result, the rate at which the central bank is lending takes longer to trickle into the market. The other reason would be that the nature of contracts of loans in the banks So for banks that have typically fixed or semi-fixed contracts, the changes in rates would not actually be impactful. And so if it's loans that are going to be renewed, this change would only come into effect when this loan is being renewed. The third one is also on the development of the financial markets. So the more developed the financial markets are, the more efficient the monetary policy transmission. I think that's it, I would say, Governor. Thank you.
Yeah, if I can continue, actually, the two questions are related because they talk about transmission of monetary policy, which is, to be simple, how the decision of the central bank to increase, reduce, or maintain the central bank rate affects inflation at the end of the day. The objective is inflation, so maintaining inflation between 2 and 8%. So there are different ways the transmission goes. There's interest rate channel, which is affecting all interest rates all the way to inflation. There is affecting it also through the demand, domestic demand of the economy, and therefore economic growth and the demand of products on the market, and then inflation. So those are transmission channels. And the two questions were about what the CBR does to impact growth, that's on the demand, the CBR does to impact interest rate. Now, complementing what Sheila just explained, the lending rate, we have two things. So long-term trends of the lending rates and the short-term trends of the lending rate. Banks' lending rates in the long term for the past 10 years have been decreasing. Slowly, but has been decreasing over time. If you look at what the rates were in 2015 or 2016, it's different from what they are now. What happened is that banks at the same time, they try to reduce the costs. The costs they have by following up on clients. As NPL was reducing, the efficiency they have while they're giving a loan and the cost that this loan is actually costing them. So overall, in the long term, lending rates are reducing. This is long term, regardless of monetary policy. Now, short term, what central bank rate must do is to impact the interbank rate, where banks are lending to each other. Then the deposit rate, then the lending rate. This transmission, as the question was, it takes time. In our analysis, it takes up to 1 year. Let's take the example of 2024. 2024 is when central bank rate started reducing. As you can see here, average lending rates only reduce now. But again, Sheila mentioned the difference between the contracts and the maturity of the contracts. In the developing economy like ours, we do not expect long-term loans to be much affected because they are long-term. But short-term loans should be affected. And as we see now, short-term loans, interest rates are reducing faster. So that's something that we are monitoring, and this is how it should work. If the CBR reduces, it will start with interbank rates, deposit rates, short-term lending rates, at least in our level of financial market development. So that's something that we'll continue monitoring. For growth, I take the example, the question was about the past 5 years. During COVID, for example, the central bank rate was reduced. The decision to reduce the central bank rate was to boost growth as inflation was low. The idea was we have a crisis, economic growth would go down, how can we support the growth? So it has contributed. It's not the only factor, but it has contributed to this economic recovery during COVID 2020, 2021, especially the second half of 2020, 2021. So the fact that the central bank rate was low contributed to more lending to the economy, then also investment, etc., and the growth was increased. Now, because our growth is, our economy is starting from very low, so any big project is boosting growth. So our growth was already high in 21, in 22, in 23. That's the time where we had high inflation. And at that time, the central bank rate was increased. So normally, one would think that this would affect growth. It didn't, because all these big projects were ongoing. Yeah. So there was really not such a big impact of the increase of the central bank rate to economic growth, but the objective was to affect inflation. Now, with lower central bank rates, we expect that this will continue supporting growth as long as inflation is low. But remember, the idea is inflation. So whatever projection of inflation will determine the level of the central bank rate. And in between, there could be consequences on growth or lending rates.
Thank you,
So, was there one more question before we close?
Murakoze nyakubahwa Gavana, nitwa Emeline Mbabazi, ndi umunyamakuru kuri Radio na TV 10. Twabonye ko ibyoherezwa mu mahanga byagabanutseho 3% mu gihe iby'u Rwanda ruzana byiyongereho 5.18%. Niba ibyoherezwa mu mahanga byiyongera, ni ukubera iki ikinyuranyo mu bucuruzi n'amahanga kiyongera? Ubwo ni ukuvuga ko ingano y'iby'u Rwanda rwohereza biriyongera, ariko igiciro cyajya ku isoko mpuzamahanga kikagabanuka. Biraterwa n'iki? Murakoze.
Maybe Deputy Governor ya gisubiza. Thank you.
Urakoze Mbabazi. Arimo ukuri mu byo urimo kuvuga. Uko twavuze export ibyo twohereza mu mahanga, nubwo twavuze ko byagabanyutse 3 byongeyeho no ibyo sorry, nubwo twavuze ngo ibyo dutumiza mu mahanga byongeyeho 5.18%, hanyuma ibyo twa exportinga biragabanuka. Twongeye kwerekana ko mu by'ukuri ibyo twohereza mu mahanga biri traditional nka coffee, nk'ibyayi, nka minerals, byo mu by'ukuri byariyongeye. Ibintu byagabanyutse mu bucuruzi bwacu ni re-export. Ariko mu by'ukuri re-export n'ubundi amafaranga twabonagaho, the differential twabonagaho kuri re-export ntabwo ari nini cyane, kuko ni ibintu twabaga twaguze mu mahanga tukongeraho akantu gatoya tukabyongeza. Biriya bindi tugiraho margin nyinshi kubera ko ni ibintu biba byakorewe hano. So iyo bigenda bibalansinga gutyo, trade deficit ntabwo ikurikira uvuge ngo niba bya export zacu zagabanyutseho rimwe ngo trade deficit ngo nayo igomba kugabanyukaho rimwe. So harimo izo contributions z'ibintu bitandukanye, so bituma balance idashobora kugenda ari 1-to-1.
Hari icyo yari yabajije, ntago ibiciro by'ibyo twohereza mu mahanga ntago byagabanutse. Twerekanye ko byaba ku ikawa, icyayi n'amabuye y'agaciro byo twita traditional exports byo byiyongereyeho 8.9%. So byaba volume cyangwa ingano naho byariyongereye, ariko n'amafaranga dukura muri ibyo twohereza nayo kubera ibiciro ku masoko mpuzamahanga byiyongereye nayo yariyongereye. Ubwo nicyo nashaka kongeraho.
Thank you, Governor. This marks the end of the press conference. Maybe a small announcement. We are going to share with you the press release shortly, which explains in details what Governor has been explaining. Thank you.
Mwakoze cyane kwitabira ubutumire bwacu kandi twizeye ko mudutumikira neza. Mbifurije umunsi mwiza. Thank you all.